Hi folks, Ryan Honeyman here from Lift Economy. Many folks have come to us over the last 10 years and asked, how do I get more involved in creating an economy that works for the benefit of all life? They also ask, what skills and experiences do I need to help make this transition? So 3 years ago, we created something called the Next Economy MBA to help address this and similar questions. Lift Economy's Next Economy MBA is an online course that's designed for entrepreneurs, aspiring entrepreneurs, students, recent graduates, employees, and folks who want to learn more about transformational Next Economy strategies and businesses. Join the growing alumni network of nearly 250 alumni who've gone through this program and learned essential skills and hopefully built lifelong relationships for catalyzing businesses in the emergent and regenerative economy. So we encourage you to check out our course. You can go to lifteconomy.com/MBA. The next course, Cohort 7, starts on September 21st, 2021. So once again, go to www.lifteconomy.com/MBA. And now, on with the show. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy. Deval, welcome to the show.
Ryan, thank you for having me.
Perhaps we could start at the beginning. Maybe not all the way at the beginning, but could you give folks a little bit of your because you have an incredible background. I'll just read a few highlights, and you can sort of dive into any points. So originally from South Side of Chicago, Harvard undergrad and Harvard Law School. Did some several years in corporate law. In 1994, President Clinton appointed you to Assistant AG for Civil Rights. Governor of Massachusetts, obviously, from 2006 to 2014, and helped create the sort of double impact fund at Bain Capital, author of 2 books, and I think you also have 2 kids, right? Is that?
I do, and a grandson, which is probably the most exciting achievement.
That's amazing.
And I had almost nothing to do with that one.
Yeah. How are you thinking about sort of impact and social and environmental issues earlier in your career that maybe led you towards this current position that you're in?
Well, that's a big and hard question, and I guess I'd come at it this way. First of all, I've learned a few lessons relatively early in life, which have been guideposts for me in all of my career choices. One was that old adage that I think each of us learned from our grandparents, that we're supposed to do something in our time that leaves things better for those who come behind us. I think very much related to that from my family was the notion that you shouldn't leave your conscience at the door, no matter what the job is. And so as I've thought about how to serve, and there are lots of ways to do that in philanthropy, in business, and in government, I've tried to find my calling in that moment where I thought I had something to contribute. And this latest gig in impact investing is very much influenced by those guideposts and my view that in a lot of ways, and I say this having worked in business and in philanthropy and in government, philanthropy and government have been letting business off the hook for a long time, meaning it was the job of those first 2 sectors to kind of fix what was broken in our larger society. But in fact, commerce and enterprise has a role to play there as well. And frankly, as the challenges facing us get larger and more complicated, it's really important that everybody get off the sidelines and do what they can. So impact investing, to me, is a way of speaking to that on the private side, and also trying to address the notion that we should be thinking out past, the next quarter in the case of private industry, or the next election cycle in the case of government, and about the next generation. And the companies that are trying to be that kind of company are the kinds of companies we want to invest in.
And from your experience as governor of Massachusetts, do you think that, because you sort of spoke to the idea of business being
central to the solutions for building a better economy. Do you see, like, what is the role of government? And, I guess maybe to phrase it this way, I've always thought that people, like, I've thought, like, hey, should I run for office? And I've always thought, no, I can have a bigger impact outside of government, using the private sector for good. But I'm curious if you actually have experience in office. And I'm curious, do you feel that is true, that notion that maybe there's more impact in the private sector, or is that sort of a false idea that we should not run for office and you should focus on using business for good? Kind of curious on your thoughts.
Well, I guess I might come at it this way, Ryan, by saying it's a false choice. We need good people everywhere, and we need people who are serving everywhere to be good. And by that I mean to have a longer term approach and to be thinking about the common good alongside their own interests. Personally, I'm a capitalist, but I'm also a believer that government has a role to serve in helping people help themselves. And I think and that it is, as Barney Frank described, the name we give to the things we choose to do together. And there's some things that we should choose to do together. That's where the debate lies. But there are some things that we as a society should choose to do together. And we want government to function well with respect to those choices. At the same time, I believe that opportunity is central to the American experiment, and that requires an economy that is expanding, as I like to say, out to everybody, not just up to the well-connected, and those who are, already have opportunities to create their wealth. And there are more and more entrepreneurs who are building companies whose products and services stand for something and stand for that notion of trying to expand opportunity. And as I say, I think encouraging through good policy in the case of government, through wise investments in the case of impact investing is a way to be involved in that.
So walk us through, you're coming to your end of the term as governor, and you're starting to think, what's next. So how does this opportunity arise? Like, do you reach out to Bain, or do they come to you and say, hey, do you want to head this new division, or what is the sort of process there?
Wouldn't it be nice if things followed as straight a line as that? So first of all, we don't have term limits for governor in Massachusetts. I have a personal term limit named Diane, my wife of 35 plus years, and she said 2 terms and that's it, back into the private sector. And when I was leaving and thinking about what to do next, I'd been exposed to impact investing while in office through social impact bonds. And Sir Ronald Cohen, who is one of the people who conceived of this idea of private capital coming in alongside government to help address a public interest challenge, was enormous. I met him while I was in office, and he introduced this concept, and it was enormously appealing to me, Ryan, for largely because I think everybody wants innovation in public policy. It turns out, of course, that if you want innovation and to encourage it, you have to raise your tolerance for failure. But politics punishes failure, so you can begin to understand why so few really innovative things are happening in government when the citizenry has so much appetite for it. And the beauty of social impact bonds is that these pay-for-success contracts is that you can experiment with private sector capital. And for those things that work, you can scale them with public investment. Really lovely idea. And I stayed in touch with Sir Ronald after we did 2 of the first of these bonds in the country while I was in office. And he had moved on and created his own earlier stage impact investing fund and had some exits that were getting a superior rate of return. And I said, really? And he said, well, part of what he was trying to prove is that you don't have to trade return for impact. You may choose to do so, but you don't have to. And that, to me, was an aha moment. I had some friends at Bain Capital had been friends for a long time, who were in the leadership here and who had offered to be sounding boards for me when I was ready for my next thing. And I was, in fact, Ryan, on my way to do something else when I thought, I promised these guys I would check in, and I did. And I described what I was doing, what I was intending to do. And one of them, Steve Pagliuca, said, "That sounds very interesting." He said, "But what you don't really sound passionate about that. What are you really passionate about?" And I said, "Well, there's this thing called impact investing. I don't know if you've ever heard about it." And he sat back and said, "I can't believe you brought that up." He said, "We've been trying to figure out how to get into that space for a couple of years. Why don't you come and help us figure it out?" So I came in, I guess, what was that, a bit in the spring of 2015, and spent a year with the help of some borrowed resources from around the firm, sorting out what was happening in the space in North America and where the upside could be for the type of investing that we do at Bain Capital, and writing the business plan. And then we launched and raised our fund, and now have a team of coming on 14.
Wow. I feel like when I spoke to you, it was you and one other guy and like someone, like just 3 people or something.
I think it might have been, Ryan. It might have been. We've closed the fund now at $390 million, which is $140 million above our original goal. We've done 3 investments so far, and our objective is to underwrite to the same financial standards as the large cap funds here at Bain Capital, but also to deliver a measurable and meaningful impact in the areas where we're focusing.
So, one of the things, I'm just curious about this because a lot of the folks on this podcast are fairly towards the progressive end of the spectrum. And, it's funny with our current president, Mitt Romney, looks like the liberal godsend from 20. But how do you sort of, were you a little bit concerned at all? Like, hey, I'm a Democratic governor and like Bain Capital doesn't, I was just curious, did you ever think like, is this not going to be a good fit because of politics, or how did you kind of think about that?
Well, I mean, it's funny. I joke about how it took, once we decided we were going to do this, it took about, 48 hours to work out the terms of my coming and 2.5 weeks to figure out how to announce it. Because, first of all, I knew the firm before when was it, 2012 election? Is that what I'm thinking of?
Yeah.
And long after Governor Romney had left the firm. I don't know him very well, but he's always been a gentleman to me. And nobody fits in a box. I don't fit in a box. I'm surrounded by Democrats here at Bain Capital and some Republicans too, and that's all fine by me. But we're all committed to making a success of this fund and coming into the impact investing space with humility and mindful that we need to not just make money for our investors, but be good stewards of the field and help to build it and build its stature and its seriousness and credibility. And that's good for the field. And frankly, I think it's good for investing generally, because as we prove out at scale that you don't have to trade return for impact, it raises some unavoidable questions about what it means to be a regular way investor.
Right. And yet, I think one of the challenges that most of us face in this space is this idea of balancing impact and return, because
sure.
So what was your thesis coming in, and maybe how has that changed over the few years that you've been there now?
Well, I think first of all that, when I say that we have chosen, I recognize that there's a spectrum of points of view on among impact investors about financial return. And we've chosen a place on that spectrum that's about a competitive or commercial rate of return, indeed a superior rate of return if we can generate it. Not as a value judgment for where others are on the spectrum, but because, number one, that's the kind of return that investors in Bain Capital funds expect of Bain Capital funds. but two, because we think it's important. I think it's important to be able to demonstrate that you don't have to trade the one for the other. Again, because I think proving that at scale makes a larger point about how to be an investor who is cognizant, as one of our limited partners puts it, of the full consequences of her or his investments.
And how did you have to find new limited partners, or what was sort of the process? Because I imagine
of raising the fund.
Yeah, was it new LPs? Was it existing LPs who've shifted money over, or what was sort of that?
Well,
process?
it was a journey, Ryan. I would tell you I liked raising this fund about as much as I liked raising money in my last job. Meaning I really hate asking people for money, but I really enjoyed the conversations with people who were either long-time investors in this space, or who were new to the space and trying to understand it, and many of whom had been, as they put it, waiting for an investment grade product in the impact space, which I think basically meant waiting for a name brand, so that they had more to say to the people to whom they reported. That's just the way the world sometimes works. I think we went out first to talk to investors in other Bain Capital funds, many of whom, or I should say, some of whom, had to deploy so much capital that the check sizes they were prepared to write to us would have represented too much concentration for a fund of this size. And so we said to them, wait for fund two. And there were a couple who could write smaller size investment checks, and so we said yes to them. And then we met a lot of new people, folks, as I say, who were conventional investors who were new to the impact space, others who were longtime impact investors who were interested in Bain's entry into the space and what it is we were trying to do differently. And I can say a little bit about what we're trying to do differently in a minute. But our LPs are a whole range of LPs, from family offices, high net worth individuals, foundations, public and private pension funds. Sort of the classic range of people who invest in private equity. Got
it. Yeah, I'd love for you to speak to the some of what you're trying to do. Maybe some example portfolio companies, or I know it's funny because sure. we've raised our $1 million fund. So I know what you're going through. It's like, first you have to raise the fund, then you have to figure out how to deploy the capital, which is sort of
right. Right.
It's more challenging than you think.
It is more challenging, and we look at a lot. And again, because it's the first fund, because we are very, very cognizant of how carefully we're being watched, and how important it is to the field that we do this in a high integrity way. We're being very picky. And fortunately, the deal flow has been such that we can be picky, and that's been great. But ours, so if you look around, what we saw in North America is a lot of other funds, just a couple that are this large or larger, but a lot of other funds, almost all of which are doing venture and other early stage investing. And we thought, who is the later stage investor? Who's the financial partner that will help a great company scale? And what we've also discovered in asking that question is that a number of mission-oriented entrepreneurs were concerned that when they sold on, they sold out, which is to say that their next, they could attract capital in the market because they had a great balance sheet and a great growth story, but not necessarily a financial sponsor who was interested in growing the mission part of their enterprise alongside the financial part. So that seemed like a white space for us, that we could do lower middle market buyout or growth investment as a real impact-oriented sponsor, a partner really. And so we've done 3 deals so far. The first was a series of low-cost gyms in Michigan and northern Indiana that target so-called fitness deserts, so places where there are high incidences of obesity, type 2 diabetes, for example. And if the conventional formula for gyms is to charge as much as possible and hope nobody comes, this is the inverse. It's to charge very little, in comparative terms, $10 a month, and really drive utilization. And we're measuring numbers of new members. We will get to measuring number of times a week, for example, that members get their heart rates up, start to share that with their health insurance providers so that their rates get subsidized even further, that sort of thing. In the case of our second investment, we invested in a company that diverts organic waste, mostly from landscapers and roadworks crews, from landfills, and instead composts that material and sells it back as composted soil and mulch. And there we're measuring greenhouse gas emissions avoided, and pretty straightforward. That's one where the impact is inherent to the business. The third is an earlier stage company that we did in partnership with our life sciences fund, another new fund here at Bain Capital, and that's one where we are the platform, or we are a platform for orphan drugs that reach small populations of uniquely vulnerable people, but where big pharma can't make the economics work to develop them.
That's great. It's and so when you look at a company like the sort of the second one about composting the sort of excess yard waste, et cetera, how do you then, like, clearly you look at the financials and there's obviously metrics and models to say, okay, it's meeting this rate of growth, it fits within our guidelines. How do you then, because there's probably a lot of different companies who may meet the financials, but then how do you decide which impact, like what's the impact fit, and how do you really go about thinking about that piece?
So we're focused in 3 areas. It's interesting; they're pretty broad areas. So take the word "focus" with a grain of salt. And they are health and wellness, sustainability, and what we're calling community building. So by health and wellness, we have been interested in access to affordable care, including behavioral health. We've been interested in home health companies. We've been interested in nutrition and healthy eating, and also in that vertical, if you will, ed tech companies whose products or services are about closing achievement gaps or skills gaps. Within sustainability, we've looked at sustainable consumer goods. We've looked at water and energy efficiency companies. We've looked at sustainable agriculture. And then community building, we think of more as a place-based strategy. So companies that by intention are helping to create jobs and catalyze economic activity in places of chronic underemployment. All of it North America, and all of it where we can be a value-added partner. And on measurement, which is enormously important in this space, we got sort of 2 pieces of feedback or consensus views in that year of homework that we did before we launched. One was that we should not invent a unique or proprietary measurement tool, that we should instead, mindful that there's no gap accounting for impact yet, but we should use something in common usage so that an investor can compare the impact that our companies are having with the impact that other funds are having, and can compare our performance on that score as well. And the other was to be careful not to turn our companies into reporting agencies. Really let them be companies. So choose a tool where you can measure. You can choose, 2 or 3 material factors for both baseline and to measure your progress as you go. And we decided to use the GEARS survey out of B Lab, which you probably know about, Ryan, as a tool that is adaptable for to meet those 2 interests. And we will measure at the enterprise level and also as a fund, and report to our LPs alongside the financials.
Yeah, I've been really curious how that, because as you know, the B Corp movement has for many years been primarily about the certification for at the company level and then the legal form, but the Gears sort of B analytics investor facing piece has been newer or at least gaining more steam. And I'm glad to hear that it's working for you in terms of measuring the impact of the companies.
Well, as I say, it's adaptable and it's adapting. This whole field is really ripe, as you know, in within the impact investing space. Whole question of measurement and how you think about it. I will say that for the longest time at the beginning, I was witnessing or hearing lots of debate about what was or was not inherently impactful. This one really cares about climate change, and that one really cares about food insecurity, for example, and they all have import. They all are significant, and I think that our takeaway was, look, let's just be clear about what it is we're about and what kinds of companies we're focused on, and measure that. Again, not a value judgment about what kinds of impact other investors or other citizens may be particularly focused on, but these are the ones we wanted to focus on. And I'll also say these are the ones where we were convinced from some research there would be sufficient deal flow and where the return profile was going to be what we needed it to be for this first fund.
Got it. One of the things I've been struggling with, I wanted to get your thoughts on this, is, one of the problems we see with impact investing generally is that you can create outsized, positive impact, or you can create financial returns and impact in the market, but it can sometimes reinforce the current inequality of the economic system, where the sort of beneficiaries of the impact, or like the sort of investors, are still wealthy white men who are the ones who benefit as the limited partners. And so, do you have any thoughts on how do we sort of get away from, or how do we sort of democratize capital away from, so the impact of the company is benefiting society and the environment, but also the sort of investors are also, it's not still concentrating wealth. That's kind of one of the challenges I'm struggling with.
Yeah, I hear that. I mean, for your listeners' benefit, I am not a wealthy white man. There's still a lot of room to grow the LP base. I will say we've had some fascinating conversations with our own LPs about this very question. Mind you, some of the LPs that we talked with are managing the pensions of women and minority workers. The managers are not as diverse as I think many in that field wish they were, but the pension holders are highly diverse, and whether we win or don't win has a real impact on them. I'll say also that I think one of the strategies, that there's a lot of exit innovation that is wanting in impact investing, and one of the strategies is really interesting to me, and I'm forecasting nothing because I'm still trying to research this some more, is the idea of employee ownership. Whether instead of going public or selling to another strategic buyer, do you sell to the employees rather, as a wealth creation device and as a way for a financial partner like us to step back and step aside and let others have their turn in benefiting from the growth and the value of the company.
I must say, Deval, you just blew my mind that that Bain Capital would be interested in selling to the employees. That's amazing.
I just said, hold on. I just said, no. Hold on. I said I wasn't forecasting anything. I'm just.
No.
The space needs exit innovation, right? It needs a way, really in part in response to your question, to be thinking about how wealth creation is democratized, to use your term.
Yeah.
And I've been affiliated with ESOPs before, small ones and large one, or a small one and a large one. One was more successful than the other. So I don't think it's a panacea necessarily, but it is one of a number of devices that I think is worth thinking about, again, consistent with our fiduciary responsibility, to think about how we build this space and all of the objectives of this space, which is to help make the economy work for everybody.
Absolutely. Yeah, and I guess mind-blowing was maybe not the right term. I was just smiling very largely because I agree with you that alternative exits are incredibly important. And, like if a company that's a high-impact company could then be the exit strategy is the employees themselves own the company at the end of the day, that's a huge victory because the wealth stays in the community. It's not concentrated somewhere else. So I was merely
But
sort of
it could be.
smiling.
It depends on the circumstances. All I'm saying is we want to be thinking about we want to be innovators in this space, and that's at least one of the things that's been on my mind.
Maybe moving a little bit more future looking without holding you to anything. Is there anything developing in the space that you're really excited about? Like, maybe it's a new industry or a sort of type of, some maybe trends in impact investing that you're getting excited about.
Well, there's so much interest in the space that I think more and more sort of conventional money managers, endowments, and such are focusing on it, and I think that's good. I feel like we may be, I won't say alone, but at least underpopulated territory, being a later stage investor in this space rather than an early stage investor. And it's not that I'm anxious to have a lot more people come in and occupy this space with us yet. But I do want to be able to prove this thesis that you don't have to trade return for impact. And if you don't have to trade return for impact, the question it begs is, why would you? And that's a question I want to be begged for all investors. I want us all to be thinking about the consequences of our investment decisions and thinking out beyond the next quarter, which I think is central to what impact investing is about.
Yeah, and what do you see? Do you see the double impact fund growing? Like, if it's the sort of 5, 10, 20-year plan, do you see this becoming a larger piece of Bain's work? I mean, assuming fund one is successful, right? That's like step by step.
Well, your point is exactly right. It's step by step. I mean, we can sketch out and have in pencil only what funds 2 and 3 might look like. There are lots and lots of questions that need to be addressed, like geographic footprint, size of the investment check. Are these the right verticals? Do we narrow? Do we broaden? There are all kinds of questions like that. I don't think that access to investment funds is going to be a problem, because I think that the appetite among investors for mission-oriented enterprise is growing, not shrinking, and I think that's driven in large measure by millennials, but a few of us parents of millennials too are pretty interested in goods and services that stand for something, companies that stand for something, and are trying to do their part to make the world a little kinder and a little more just. So I think there are all kinds of future possibilities that are really, really promising. But first things first, we got to nail Fund 1, and that's what we're focused on.
Absolutely, I definitely feel that. Are there other, in that year of research and maybe up to now, are there other investors that maybe you could point to for listeners who you admire as like you really think they're leading in this category as well?
Oh, wow. There's so many good ones. Bridges Ventures, of course, terrific. That was Sir Ronald Cohen's fund in the UK, and there's a U.S. Bridges Ventures as well now, extension of their work. The folks from DBL out in San Francisco, Nancy Fund's group, just extraordinary. There's SJF, there's KPOR. There's so many really, really great ones and so much to learn from. And there, of course, there's TPG Growth, which has announced a global middle market venture undertaking that sounds very ambitious from a distance as well. So I'm really encouraged by how much activity there is in the space and how many opportunities there are for mission-oriented enterprise. And I hope that all kinds of entrepreneurs, not just the folks who run in the very well-populated entrepreneurial waters of the coasts, but that all sorts of entrepreneurs in all kinds of communities in America and beyond are finding their way to the kind of capital that's being made available, because I think entrepreneurship and innovation will be a big part of what makes our economy and our society better.
One question that the last few things here is that another guest said this was a good one to ask people is, what do people never ask you that you wish they did?
It's funny. Given my last job, I often have in mind what question I'm hoping they don't ask.
There you go.
Gracious. People rarely ask me what I do when I'm not, flying all over the place, trying to meet entrepreneurs and figure out where to invest. And my answer to that would be, I am a beekeeper and a gardener, and I love to read.
That's phenomenal. My last name's Honeyman, so
of course it is.
Beekeeper.
I was totally pandering to you.
And is there, regarding those or something else, what's your most favorite thing to do in the world? Is it be out in the garden, be with your kids, or is there something that you look forward to the most?
I would say being with my kids, but they're grown now and they have less interest in being with me. So I won't say that, but no, being outside, being in the garden, being in Western Massachusetts, which is our own piece of heaven. Those are all pretty important things to me.
Cool. And so where can folks learn more about what you're up to?
Well, we have a website. We have to update it, of course, as the year is coming to an end. But stay tuned. We're going to be out at conferences and in community trying to raise awareness of the importance of impact investing and looking for opportunities for us to invest our investors' money as well. So stay tuned, stay alert.
Great. Well, thanks so much, Deval. I really appreciate your work, and I think you bring a unique perspective of sort of executive government experience plus impact investing, which may make you the only impact investor with that experience. So I think it gives you some good insight into what's possible.
Thank you, and thanks for having me on.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.